Awesome. We are rolling. Daniel, welcome.
Pleasure to be here. Thank you for having me.
Thank you for joining. It's been a bit of a stressful start.
Yes.
Should we warn people about the potential scam that's happening?
Yeah. Well, firstly, thank you for your patience with me. For those who don't know, we're starting this about 30 minutes late. I got a call from someone purporting, still unverified, but we think a scammer pretending to be a detective from the Holborn police station.
Goodness me.
And they informed me that I would be receiving a call from the FCA in the next 48 hours to make sure everything was okay and to keep an eye out on that call. And now the FCA, given that we're from a financial services background, do not have a reputation for speed of execution, shall we say. And so in a matter of, I think it was 90 seconds from call one, I was called from someone purporting to be from the FCA saying how they needed to act quickly to ensure I'm protected. So either I'm currently being scammed out of my life savings while on this podcast because I haven't acted, or I've saved my life savings because I haven't acted. If we ever have episode 2 of this, I'll if I'm flat broke, I made the wrong call.
Tune in to the next episode to find out.
Let's see. Yeah.
You've definitely added a new twist to this podcast series. But we are glad you are finally here. Thank you. Hopefully this is nothing. Hopefully this is. I mean, I hope it's not. I hope it is a scam. But I wish other people aren't getting scammed.
Yeah, I guess for the listeners at home, my working assumption is if the FCA called you within 2 minutes of you expecting to be called, it's probably not the FCA. Sorry, FCA, if I'm wrong about that.
No comment. Daniel, you're the co-founder of Integrated Finance. Why don't you just kick off by telling us a little bit about what Integrated Finance is?
Sure. So Integrated Finance was the brainchild of the founders of a company called SettleGo, which was myself and Alistair Cotton.
Cool.
We're 2 of the 4 co-founders here at Integrated Finance.
Okay.
And it's designed to be the solution to our own naivety when launching a fintech. Back in the day, before banking as a service was I was going to say household term, but it from an industry's perspective, it's a household term.
Yeah.
Before it was a recognized term, we started a company called SettleGo, which was really like a very early beta version of TransferWise for business.
Right.
We effectively were a foreign exchange platform that wanted to issue accounts in our customers' names, so that once we'd performed the FX conversion on the payout, their customers were receiving it from them rather than from some unknown third party.
Got you.
And so that was the original solution. And so when we were growing that business, we had to integrate with local banks in different territories to be able to submit payments in the names of the merchant or the customer in each jurisdiction. Okay. And so our working assumption was we don't really know what we're doing, but we're going to learn on the way. And so we kind of had a Moore's Law efficiency grade in our head. First one's going to be super, super hard and super expensive. We'll make all of our mistakes, but the second one will be that bit easier. And then as we scale to be the globally recognized brand that SettleGo never was, we're going to be able to spin up these integrations in a matter of minutes, and we'll usher in a new era of fintechs on top of our platform. Mm-hmm. That's not what happened.
Okay.
Back then, there really wasn't a great deal of choice for fintechs that wanted to issue accounts. If you were a large fintech, you might get a relationship with somebody like Barclays who can technically do it, but rarely has the risk appetite to do it.
Right.
But or you'd go to these regional banks, often called community banks in the States, or tier 2, tier 3 banks in the UK and Europe. Yeah. and you'd basically wine and dine the executives there and go, hey, you've got a banking license, you're very small. If you allow me to issue your accounts to my customers, I'll bring loads of volume. Happy days.
Yeah.
The problem was the first integration ended up not being the hardest, although it was very hard.
Okay.
It ended up being the easiest.
Really? Yeah.
For the very simple reason that when you're integrating one system to another, our core to the bank that we were working with, you have to make no compromises. You just got to get it to work.
Okay.
I need this message to go from my system to the bank, and I need the bank's messaging system to come and flow backwards.
Got you.
Perfect. What happens is when you add a second bank, so let's say we were issuing sterling accounts, but now all of our customers wanted to have euro accounts for trade in Europe.
Yeah.
These small banks typically would work with you because they had no risk of losing a correspondent relationship. So I think the bank in the UK at the time was Contis.
Right.
We then gravitated to, there's much more options now than there was back then.
Yeah.
But Contis only had GBP. So we went to Germany, and I think we worked with a bank called Deutsche Handelsbank.
Okay.
They also powered TransferWise, as they were called back then, and a number of other fintechs.
Yeah.
But the problem was all of the design decisions that we'd made from a systems perspective to work with Bank A made it tenfold more difficult to work with Bank B.
Right.
One bank, it was a synchronous process where you call for an IBAN, and the IBAN comes back immediately. The second bank was an asynchronous process. You'd effectively bulk buy the IBANs, store them your side, and then use them one by one by one. And then as we scaled, there were other types of solutions that required more and more compromise and refactoring. Yeah. And what we ended up realizing is by bank 6 or 7, the lead time to getting them connected and working smoothly had gone up almost exponentially compared to the first one. So while scaling that business, we actually went out to market to go, is there a platform out there that can act as an abstraction layer to us trying to grow our fintech meaningfully, and our engineering team who were simply trying to keep us technically afloat. And there really wasn't anyone at the time. APIs were very immature at the time.
Right. When was this roughly?
I think we'd be looking at 2019.
Okay.
2019.
Yep.
And so around about that time, the founders were exploring an exit anyway, and we became more and more passionate about this idea that it shouldn't be such a huge problem for fintechs to focus on what the customer sees rather than focus about the architecture behind the scenes. And we had this grand vision where we were a little bit like Lord of the Rings, going to create one API to rule them all, just like everybody in every industry was thinking. And so the idea was originally to allow young fintech entrepreneurs to build a product where they didn't have to compromise design decisions based on the architecture of the bank that they were going to choose.
Right.
And so integrated finance was born really as a way to abstract those nuances of APIs, SFTP servers, synchronous and asynchronous processes, scheme validation, beneficiary verification, and all of that stuff, so that our customers could focus on what really matters, which is the user experience and the reason that they're building. So that's that was the original story. 5 years later, we power, I think, about 50 fintechs in the UK and Europe. A couple of customers in the States, but they're primarily using us for access to UK and European markets.
Cool. Very cool. Very cool. What a story. I love also how it starts somewhere else, and then with the knowledge and with the learning, you then gravitate towards a different problem, and you're solving all of a sudden potentially a much bigger problem than you even started out to.
Certainly one of the our hypothesis early on was that there would be a lot of fintechs that needed multiple bank integrations.
Right.
And either this was not borne out in our experience, or we missed some fundamental part of the calculus when going to market. Problem number one was we were brand new.
Yeah.
So we hadn't factored in that banks that power these industries they're getting cheaper, but it's still not pay as you go.
Right.
You know, there's setup fees, there's monthly minimums, there's regulatory costs. And so the types of companies that can afford that were much, much bigger than integrated finance.
Right.
And it's very hard to convince, say a blue chip organization to take a punt on their critical infrastructure with this startup that's just raised 2 million seed capital. And so what we thought was there would be a boatload of these large fintechs looking to digitally transform their integrations, but really it's actually the last thing most people want to mess with.
Right.
So that left us going to the other end of the market, which was the startup fintechs.
Yeah.
And again, if you think about my description, bank integration 1 was hard.
Yeah.
Bank integration 10 was harder, not easier. We hadn't properly accounted for the fact that new startups just wouldn't have the cash to need or be able to afford multiple banks in the back end.
Okay.
It's double setup fees.
Yeah.
It's 2 mouths to feed. Banks are as hungry for revenue as anyone because this is expensive stuff.
Yeah.
So what we ended up realizing is just a single bank integration was from time to time hard enough to pay for services anyway. But rather than deepening our expertise vertically in the bank integration stack, it is something that's important for us.
Yeah.
What we found is there was kind of a lateral expansion of our product, so that we were less of an account issuing abstraction layer and more of a core banking solution.
Interesting.
Yeah. So people want to submit payments to banks, but they'll want to generate bank accounts.
Yeah.
Other customers want to do FX
Yeah.
across those accounts. Still more customers want a card to be attached to those accounts.
Yeah.
And it's still quite unusual for a bank to offer both account issuance and card processing.
We know that well. Yeah.
Exactly. And then you have all of the auxiliary stuff. So
Yeah.
often if you're doing all this, someone will say, well, can you collect my KYC for me?
Right. Yeah.
If you're collecting my KYC, will you do the monitoring of the transactions on said KYC collections?
Yeah.
And on and on and on.
It goes.
And you pretty quickly realize that there's this sort of event horizon that once a customer's gone over it, they are forced to continually to ask you to solve their problems. And so you're exposed to some technical bloat where you might not originally have planned in your seed deck when raising 2 million, but nonetheless, these are jobs to be done by every fintech, and we're convinced that should not be where entrepreneurs are pouring their cash.
Yeah,
it's commoditized. The fact that it's regulated means by default it's non-differentiating.
Yeah,
so if we can reduce the barrier to entry from a non-differentiated standpoint, we're hoping we do free up some capital for those founders to go and actually make a difference in this world.
Yeah, I think that makes a lot of sense. It should be you shouldn't be spending your time integrating and working on the nitty-gritty of the architecture. You should be putting your opinion, your vision of what your fintech app is out in the world, and that's exactly what you enable people to do.
Yeah, I think ultimately the bar has been pushed incredibly high by some of the hyper successful fintechs.
Yeah.
Really, out of the UK, if I'm being honest, I think Monzo, Starling, Wise, Revolut. They were born in the time where it was actually quite easy to acquire customers. You just needed to be speedy with your onboarding.
Yeah.
And that really was enough for them to dominate the market. Who would go to RBS and take 2 days off work filling in documents when you could do it a 3-minute onboarding with Starling?
Yeah.
That was good enough back then. It is no longer good enough.
Yeah.
The from a technology standpoint, we're at a high tide in fintech.
Yeah.
And so these modern fintechs, if they want to compete,
yeah,
they need to step away from some of that nitty-gritty.
Okay.
And the compass should broadly be like this. Will it delight the customer if it works? No. Will you lose the customer if it doesn't? Yes. That's where you shouldn't be focusing then.
Yeah.
Go and delight them, because if the best you've got is it works, you're not going to be winning market share in a high tide fintech market. Yeah. And so we always tell our customers, let us do the thing that will make you lose a customer if it goes wrong.
Yeah.
But that will not be the reason you win a customer. Go and figure that out yourself.
That's such a good, simple test. Like, it's so simple, but it often gets lost when you're in it, when you're building, and you're focusing on making something work. You can sometimes forget that it's like, okay, yeah, but that's not necessarily enough in this market. It needs to be more. Super interesting. And Dan, what's your background? What's Alistair's background? Are you from a financial background? Are you from a tech background?
So Alistair studied economics at university. I studied creative writing at university.
I would not have guessed.
Alistair was he was always interested in finance. I got my first job in finance because a friend of mine had a five-a-side team who were short players. And I think I scored a hat-trick in my first game for them. And his boss said, right, who's he? We need him on the team. And I used that as leverage to get a sales job at that company. And,
fantastic.
And the rest, as we say, was history.
Do you still play on that team?
No, they disbanded shortly after. But I actually met Alistair. We both worked for a currency brokerage.
Right.
Me in sales, getting told to beep off 99 times a day, and if I was lucky, one would say no. And Alistair was the account manager.
Right.
So on any given day, I'd be complaining at him for not generating enough revenue off the my hard-fought customers, and he would be saying precisely the same back, saying, go and find some actual good customers. I ended up progressing and joining a competitor, tried to steal all of Alistair's customers. As we grew our careers, I started doing more and more large enterprise deals.
Okay.
Until eventually one such large enterprise ended up approaching me to start a currency exchange service for them rather than consuming the thing I was selling them. And given the fact that I really didn't know how to do it, I lied and said, sure, that's easy. And I contacted the smartest guy I knew, which was Alistair.
Right.
And I said, let's start a business. I've got a customer for us. And SettleGo was born out of that, entrepreneured inside this group of companies.
Yeah.
That's where we learned all about how not to build a fintech, and now hopefully integrated finance is our chance to put some of those design decisions right after all this time.
That's so cool because, in all honesty, when you were speaking earlier, I was like, "You're very well versed in like API chat and all of this." And then you say you studied creative writing and then your background in sales, and I was like, "Well, fair play."
But it wasn't easy. It still isn't.
That's what AI is for now. now we've got a bot to ask questions and get answers very quickly.
Exactly. Yeah. But no, it was a really organic relationship between myself and Alistair, and this being our second business now. Yeah. So it's pretty solid footing to be working with someone who you used to have slanging matches with as a kid. We know we can say whatever without hurting the other person's feelings.
Do you think that's really important for a founder-to-founder relationship to have that kind of level of honesty and deep trust?
I think I think founder relationships can work in 1,000 different ways.
Okay.
It's good to be. It's good to have a friendship-based relationship, but if you're afraid of harming that friendship because you don't want to tell someone what you really think, I don't think that's healthy for the business at all. And if you look at some of the more successful serial founders, you won't find as often as you think you would founder pairings through businesses.
Right.
And so the reason for that is often in times of high stress, friendships fray. But also if they don't fray, it's probably because the hard words that need to be said aren't being said to protect relationships. And I can't remember who said it. It certainly wasn't me. But a founder friend of mine did say sometimes it's healthier for a friendship to do one business and done, so that you can preserve it and ensure that you don't prioritize your friendship over the needs of the business.
Right.
Yeah.
Right. This is so interesting because I think a lot of people like maybe say, "Oh, I should do something with one of my friends," or maybe there are founders out there who are going through a tough time or a tough project or whatever that are thinking, "I need to say something." And
and it's totally contextual, right? Some founder friendships, some friendships are antagonistic by default. both people like to make fun of each other.
Yeah.
If that's the fabric of the relationship, then working together probably won't be that big a problem.
Right.
If it's not like that, it might be. Mm-hmm. And then on the flip side, really, if I was an investor and someone was coming to me saying, "Hey, I've got this really great, awesome idea," what I'd usually do is say, "Okay, who's the team?" And if the guy said, "Well, it's just me," a little piece of me would be saying, "Well, if it's that great, why haven't you managed to convince at least one friend of yours to work with you?"
Right.
And there's a bunch of answers to that question, but I think one plausible answer is either you don't have good friendships, which may speak to your character, or you have lots of friends, but you haven't been able to persuade a single person that it is a good idea, which either suggests that you're lacking leadership skills or the idea itself is pretty crap.
Right.
So there's no cut and dried way of looking at this, really. It's hyper-contextual.
Yeah. Yeah, it's a good point. People are complicated. We're all complicated. And so are startups. Yeah. Now, you're in a really interesting position because of the way you are helping so many fintechs and the way you're helping fintechs. You're in a really interesting position, in my opinion, that you get to see like the very nitty-gritty, the core of that financial relationship, whether it's banks or cards or whatever it might be. What are some of the like core problems and challenges that you think in kind of today's world in fintech startups especially are facing when it comes to integrating with their partners?
So inertia is probably the single biggest problem.
Right.
We sit at the crux of five different bits of inertia. So inertia number one, customer says, "This is what I want." They need to communicate that to me.
Yeah.
And often we're just the technology. So they'll need to communicate that to a banking partner or a fintech that's willing to support that model.
Yeah.
And so they've got to communicate internally what they want themselves.
Yeah.
They have to communicate to us, their infrastructure provider. Sometimes they won't have an in-house dev team, so it's a third-party development agency that they have to communicate to their for their mobile app development. Then they're going to want some kind of transaction monitoring system, maybe a card processor, and then the bank that is powering this needs to give it the seal of approval.
Yeah.
And what we find is a small change, let's say in the mobile app layout, contributes to a ginormous change across the ecosystem of how they support this.
Okay.
Equally, humans can get distracted and inattentive, and if a customer goes to great pains to describing like an architectural flow of their document, an AI might read that and remember it. a human will go, "Ooh, I'll look at that after lunch, and then they'll go and have a double protein Chipotle, and they'll get back from lunch and go, oh, not right now. And if you imagine if only one person does that across a dependency of 50 unique individuals, that means it's happening at least once a day. And so these projects just get kicked further and further and further down the road, and SLAs after SLAs get missed. And going back to your question, one of the key challenges facing fintechs is finding a way to condense the nodes on that information network down to as small as humanly possible, so that you can start building up momentum on development.
Right.
Even as simple as a chart of accounts, right? So fintech A might say, okay, I'm going to be a lender, and here's where I'm going to park my money to run my business, do my payroll, do staff entertainment. That's going to be with the best provider too, usually. Mm-hmm. Here's going to be where my fees go. So every event that I derive a revenue from, I want it to hit account B. Account C, well, this is where I'm going to have my, that if I'm a lender, this is where I'm going to do my fund loans from.
Right.
And so another provider, let's say an FX broker, might say, well, I'm going to use my operational account as the collector of my fees. So it all just goes into one pot. This is going to be my currency exchange account. Mm-hmm. Another customer is going to be issuing virtual IBANs. Mm-hmm. Another customer is going to be issuing physical IBANs. Mm-hmm. Another customer is going to just be issuing ledgered wallets on top of one big account. And all of this needs to be communicated across the ecosystem in a way that everyone understands, and it's pretty boring stuff. So, often people, even with the intellect to understand it, yawn through it and can't remember the details. And we see projects get delayed by weeks and weeks and weeks, just on chart of account finalization. And then once you've defined the architecture of the accounts, the chart of accounts themselves, you then need to define the triggering events between those accounts. Right. This is a fee. This is a return of funds. This is my sales guy being overzealous and charging too much, so it's a refund. This is a loan. This is a repayment of a loan. This is a potential fraud identified, and a customer might say, "Well, I want my suspected fraud transactions to go to a suspected fraud account, so that my ops team every day they can go in there and go, this is how much we have suspected. This might be my SAR filed. And so each CFO and FD and MLRO and CEO and ops team will look at exactly the same problem and come to a different conclusion. That conclusion needs to be mapped out. The chart of accounts structured in the way that business can run. The triggering events to move money within that ecosystem need to be done. And then you have to neatly wrap that and go to the bank and go, you're cool with this, right? and often MLRO 1 will say, sweet, bro, that looks fine to me. And MLRO 2 will go, well, actually, the wire transfer regs do stipulate in Article 5 that's actually not going to be commensurate with the regulations coming in November. And the whole process can start again. So what integrated finance is trying to do more now than we did in the past. In the past, we built to spec. You want you want this, sir? Yes. If someone asked us to jump, we'd say, how high, sir? Now there's a lot more. We won't build what our customer asks if we know that the banks that they want to work with will get uncomfortable with it. Okay. So there's a healthy pushback to say, we can build this for you, Mr. Customer, but if I was the MLRO at Griffin, I might highlight these concerns with this flow. And here's why... Here's why and how you might want to reconsider the way you want to pool cash. Everything from segregating client money. So we always recommend having a fee account instead of pooling it with your ops account. Right. And safeguarding, of course, is like the backstop to all design decisions anyway. all of that is stuff that founders have to care about.
Yeah.
But it is not something that the end user cares about.
No, yeah.
And so yet again, there's this asymmetric relationship between what's important and what moves the dial from a growth perspective.
Yeah, that's a really good point. And I guess you and integrated finance, from your perspective, you have like more knowledge and more experience of working with these different partners, and you know what the types of pushback might be and what makes people come from. You can, I guess, bring that forward or bring it earlier into the process, so it's not like a late change or like a showstopper before launch or anything like that.
Exactly. As much as we want to be a technology company first, you get dragged into the consultative arm of any project.
Yeah.
And so what we now have is constructs, standardized configurations that we know keep the banks comfortable with the flow that's going through them, along with the management reports that a CFO and their ops team would have to build anyway just to be able to run their daily business. We sort of chart that all out early on, build the construct, show the customer how to use it, and then they're able to layer on complexity to those artifacts rather than have them build the artifact themselves.
Yeah.
Now, some customers are far more mature and they'll say, no, I know exactly what I'm doing. This is how I want it to work. And we will, of course, support that. But for the younger players, or they might not be an immature business, they might just be wanting to embed a financial service into an existing non-financial service business.
Yeah.
So a lot of the larger technology companies who have amassed a large pool of either employees or clients or contractors, often in the never-ending bid to get that incumbent client base to consume more from them, they will want to offer loans or early wage access or contextual perks that are relevant to that industry.
Yeah.
And so whilst they're very large and they have far more technical resource than the average startup fintech, all of that expertise has never really, it's always been probably a first principles led engineering team rather than in financial services, it's a last principles.
Yeah.
No one cares what the right design is. This is what the regulations say, so do it.
Yeah.
But so there's a bit of coaching involved for those guys too.
Yeah, it's interesting you say that, because sometimes I joke that like there's this bridge between fin and tech, and it's as though you're helping with that bridge of like, here's what the financial regulation says, and you want your technical architecture to look like that, but ultimately these things have to meet at some point, and a CFO, a COO needs to have the right information, and that needs to be passed to the FCA or PRA in our case, or whatever else it might be.
Yeah. I guess the barometer for how successful integrated finance will be in the future will be the time to live. How quickly from the idea in an entrepreneur's head to a product live in the market. Realistically, that if you can get rid of the inertia that I mentioned earlier and have everything humming, and when decision is made out on one node, it's translated through to the rest of the network. You should be able to do this in 6 weeks, in 8 weeks, where the reality right now is it's taking multiple months for these projects to get live.
Yeah.
And for some of the larger and more complicated ones, you do see them go in excess of 12 months.
Oh, God.
That's 12 months where no value is being generated for a consumer, no value is being extracted from the provision of services because it isn't live.
Yeah.
And so the fail rate of the modern fintech will stay uncomfortably high until you can reduce both the cost to build all of this and the time it takes to go from idea to live.
Yeah. Yeah. I think that's a really good point, that it should really be a week's long thing, not a 12-month long thing. Time is money. Yeah. And,
when you think the regulations stipulate that you are not allowed to innovate all that much, there should almost be a pre-configured solution that this is how you don't go to jail. now you can add to this to optimize your client acquisition.
Yeah.
But it's that this is how you don't go to jail piece.
Yeah.
That adds probably 300-400% of the time to live, waiting for policies to be reviewed, proving that you can implement those policies, acting on those policies, getting those policies signed off, doing tests to show your business, all that takes months and months and months and months and months. I feel the industry needs some innovation there, so that all of this work can be done once and then consumed and exported by many brands.
Yeah, I think that's a really good point. Someone, and this is something we actually talk about internally at Griffin as well, of how do we kind of codify a lot of this, and how do we put it in a technology wrapper so that it's easy to understand, access, run with, without any miscommunication or anything. So, I mean, like onboarding for us is KYC, KYB onboarding is probably an example of like a first area where we said, okay, this is our risk appetite here. We're going to run all of these checks. Here's the decision engine. If you want to work with Griffin off the shelf, like, great, get into that API, and you don't even have to worry too much about what's going on behind the scenes, but you do know what information you need to collect, etc. But I guess that's just the start, and there's a lot more. There's a lot more that needs to be done in the industry. It's a really good point.
Yeah, and I think an interesting observation I've noticed. It's if you think about it from a first principles point of view, Griffin should not have existed. Like all of the banks that exist out there have painstakingly scaled. They have tremendous functionality. All right, their APIs generally suck, so there would have always been obvious innovation for Griffin to take advantage of there. But from a core fundamental, creating a bank account, allowing money in and out of that bank account through wires or open banking or cards, all of this infrastructure was built from the 60s to the 2000s and works globally. I've yet to go to a place where my Barclays bank card doesn't work. Yes, they charge me £65 to buy a cheeseburger that costs £5, but it did work. No one can deny that. So all of the infrastructure has been built for this innovation to load on top. The funny observation I note is there's no incentive for them to innovate on top. Right. They already own the market. 99 pennies out of a pound or 99 cents out of a dollar for any Americans watching or Europeans goes through the same 10, 15 financial intermediaries globally anyway. And ultimately, like in today's society, because interest rates are reasonably high, all of this is a deposit grab so that you can generate interest. Why then, if Barclays were to innovate, all they'd be doing is taking a step away from the customer, therefore being exposed to increased risk without being exposed to upside, because best case scenario, these deposits start leaking away from their infrastructure. So there's been zero incentive for the guys at the top to actually offer these services, even though they actually can. And what you then get is this gigantic hole at the bottom end of the market that is being filled by the new startups. But each of those new startups, if I go back to my original explanation of SettleGo, we worked with banks who did not have correspondent banking relationships. Each of these new startups will start without correspondent banking relationships. But as you guys scale, you're going to go into Europe. You're going to go into the States. And then what I'm really interested to see is how does correspondent banking evolve in the banking as a service era. That's the bit that I haven't really figured out in my head yet. The Wolfsburg principles. I think like guys like Revolut and Wise functionally have nailed this. They have ledgers that allow distribution of cash all over the world nearly instantly. but are they ticking the boxes of the Wolfsburg principles, showing who's really the sender, who's the recipient? I don't think financial services has come to grips with that problem just yet.
Yeah, I think it's a fascinating problem because as the technology is probably there to do it, but then it's as you say, it's like the Wolfsburg principles. Can it jump over the border? Can it? How do you bridge the different regulatory regimes across borders seamlessly in a way where, like you say, your $5 cheeseburger doesn't cost $65 of compliance? It's fascinating, and it's fascinating for us at Griffin as well, because one day it won't just be the UK, and it's like, right, how do we make this work in Europe, in the US, wherever this journey takes us?
Yeah, and like speaking of abroad, I do find the further east you go, the more financial services seems to have skipped a generation. And so we have this UK Eurocentric opinion that, like we have SEPA, one of the most mature payment systems in the world. UK Faster Payments was, if not the first, one of the first real-time settlement systems for a major economy. And so we think, wow, like we have extremely high trust in our infrastructure. When was the last time you downloaded a statement from your bank and copied it into Excel to check was the balance right? Never. And so it's super high trust.
Yeah.
But I think a lot of that innovation happened years ago, and so quietly the jurisdictions that didn't have those robust, reliable banks were, by hook or by crook, forced to find another way to transmit value. Yeah. And so they kind of, a little bit like how the UK and the US went, horse and cart to car to cars and mopeds. In the East, they went from horse and cart to mopeds. they skipped that generation. Yeah. And I feel sometimes UK European banking is, we're like really improving the car and refining our car. But in, say, like Kazakhstan, they have financial super apps now that the telcos have built, right, that let you transact. You build like absolutely everything in a mobile app, and it's light years ahead of where probably the closest we have to it is the zenith of fintech, which is like probably Revolut. They've squeezed the most functionality in. Yeah. That's basically the default in places that we would have traditionally, put our noses up at, like places like Kyrgyzstan and Kazakhstan. And I feel it was born out of necessity. Right. They didn't have huge, large banks with great, reliable correspondent banking networks. Right. So they were forced to go, telcos, that'll do.
We'll skip a generation of.
Same in Africa with M-Pesa.
Right.
And so now, to some extent, we technologically playing catch up.
Yeah. It's fascinating, and it's great it's great that you say it, because it kind of opens our eyes, and it's like, actually, we have stuff to learn from these economies, and even Brazil. I think it's their payment system's fantastic and incredibly quick.
Yeah, and whatever I say in admiration as you go east, I think that the trend continues, because if you go west, despite the decacorns that exist like Stripe, the American like wire transfer network is really garbage. You've had to have abstraction layers to innovate on top of that, like Zelle. I remember, I still remember when we were launching our previous business. Right. We were looking to issue local dollar accounts in the States. Right. And I won't name them now, but it was a really slick, well-oiled American sales team that jumped on a call to show us their wares. And they were demonstrating their online platform. Okay. And so stuff that the UK had done for 10, 15 years at this point was being pitched to us like, bleeding edge innovation. Yeah. I think like one guy was showing us how you can see all of your incoming and outgoing transactions on the dashboard. And then he went over to the next guy who obviously wanted to be able to be part of the sale too. And he said, and if you just look here in the top right corner, you'll see, can you read that clearly, guys? That says export. And we kind of looked at each other and went, is this a sketch? But no, they were deadly serious, and they were super proud of it.
Wow.
And then later, a couple of years later, one of my friends moved out there and took a job.
Yeah.
With a high growth tech startup out there.
Yeah.
And he said, everyone's been saying, the American payment system's super slow. They're rubbish. Like, there's this instant payment button. A click, my account gets debited, money sent just as fast as a UK faster payment. 4 days later, his friend took a picture of a check he'd received in the mail.
No, in the mail, physical check.
Yeah. So when he clicked that, when the guy clicked send, what had happened was an American check cutting machine had gone chunk. It had been put in an envelope, closed. Someone with a poor tongue probably licked it and stuck on the stamp. And 4 or 5 days later, a check arrived at the destination, and the guy couldn't clear it for another week or so. So it is. Don't get me wrong; it has got significantly better than that. But innovation begets need. The richer the country, the less they need to innovate something like payments. That is changing now, of course.
Yeah. Oh my God, I'd like just 2 weeks to get a payment from your friend.
It's in the mail.
Wow.
Yeah.
Thanks to the potential scammers earlier, we are running a little bit short of time. So maybe just, we should definitely do this again if you're up for it. I think it's a fascinating conversation.
Sure.
But final quick question. What advice would you have as a serial entrepreneur, Daniel? What advice would you have for other founders, especially in the fintech space, obviously? Yeah.
Find a problem, preferably one that you've experienced personally, and solve it. I've seen too many people read regulations and go, "Ooh, this regulation means this will be needed in the future," without ever having validated whether that problem exists.
Right.
I see a lot of people build cool tech and then try to sell it. No, nobody really cares about cool tech unless it's addressing a specific problem.
Yeah.
We started this business because we had this problem making our core banking platform submit effectively a payment message to more than one bank.
Yeah.
And so we thought if we had this problem, probably other people had too.
Yeah.
And thus far, that's been validated. I think had we gone out and said, ooh, we can build out an API aggregation platform like some other players in our industry have, without validating the problem, it just won't work. And it's not because the problem doesn't exist. It's usually quite obvious to see a problem.
Yeah.
But if you haven't felt the problem, you can't contextualize it.
Yeah.
And so there was a competitor of ours, I won't say their name, well-run company, raised 10 million, recently exited. I think that the team that built that saw the problem, but hadn't felt it like we had. Right. And so they poured all of their energy into making this really fantastic payment messaging system, but hadn't internalized that a payment is actually part of a value chain of things before and afterwards that also need to be solved.
Right.
And whereas even if you perfect that part of the stack, if that part of the stack, someone has to go out of their usual journey to consume it and then go back to their old journey afterwards, before and afterwards, it's going to be very difficult to move the whole value chain. Like a really simple example is transaction monitoring. A lot of people view a payment and the beneficiary as two parts of the same coin. A payment isn't just a message to send money, it's a message to send money from someplace to someone.
Right. Yeah.
And you have to, and those two things, the validation of the sender and the recipient, is not just a payment message. It's not just a can you, it's a should you. And by hyper focusing on the can you, you ignore all of the problems. Like, you might be amazing at selling to a payment operations analyst, but if that payment operations analyst is just doing something at the behoval of an MLRO, and you haven't considered that MLRO's own needs, then you've built an amazing piece of kit that hasn't internalized the wider problem. Yeah. So, recommendation to founders: if you haven't felt the problem, I'm not saying don't start the business, but figure out a way to feel the problem.
Yeah, that's really, really good advice. Awesome. Daniel, thank you so much. Absolute pleasure.
My pleasure. Thank you for having me. It's been great.
Thank you. Awesome.